called it, the market continues to go up there, was buoyed by a couple of congressional actions. I was curious to see your take on the week.
You know, it's a great week, like we talked about last week. Just a big technical breakout. Once you got above the 2,500 on the S&P 500, you started hitting new highs in the Dow and the Nasdaq. You start getting all these traders that start buying, money sitting on the sideline flows in, hedge funds buy. It just becomes a trader's market, and it's not about value, it's all about trading. And it's just the momentum behind this move has been really strong.
What surprised me, and you talked about this earlier, is the jobs market wasn't really that positive, and yet the market didn't seem to react to that at all. Why was that?
Well, I mean, the headline number on the jobs report was negative, compared to what they expected, but it's all hurricane news. So everyone was talking about, you couldn't really predict what the number would be. If you tried, you were just guessing. But the main number of earnings was strong, and the unemployment number itself was really strong, which is now putting the odds of an interest rate hike in December up to about 80%. So, which is surprising with the market, that we didn't see a bigger drop in the market with all of this technical trading, that people didn't take more profits on Friday. I was actually very surprised that the market bounced back to close basically flat.
I guess that also brings the final point that I wanted to ask you about, is because now there seems to be this overwhelming probability of yet another rate increase by the Feds. The market's going to correct at some point, I would imagine, right?
You would think so, but interest rates are still low, and it'll come down to what they say when they make the interest rate announcement. If they say, okay, this is it, nothing planned for next year, we're going to leave it here, then the market's going to look at it and say, okay, this is what we know, these are the rates, we can still get higher yields in stocks with gains, we're going to stay in stocks. If they say, no, we're looking at possibly 2 to 3 more increases next year, if the economy is still going the way it is, then you're going to start seeing people looking at bonds differently, because if you can get 2.5% risk-free in a bond, well, you're going to move your money out of the stocks that the dividend stocks are paying 1 3/4, 2%, because you know that at some point they're going to become overvalued, and there's downside risk as well. So it's really a lot of the language that they say at the Fed meeting in December.
Well, I guess we'll watch that. So right now for investors, continue to stay the course, continue to look at equities as a real buyer's market, and we'll take it from there.
Yeah, I wouldn't be jumping in with both feet right now. If I was starting to invest, I still am somewhat on the cautious side for new investors, unless they're doing a systematic investing approach, and it's a little different. But when I get new investors, I'm having them, tone down their allocation a little bit, because we know there's going to be a pullback at some point. I'm not saying I'm being conservative, but if somebody is 90-10, you go to 80-20 stocks to bonds. You have to be a little realistic, because at some point you can only stretch the rubber band so far before it snaps back. Now, I'm not saying this is 2008, but we know it's coming. It just, you can't go straight up forever. And, maybe leaving a little on the sidelines, when you get the pullback, we can jump in and start buying, and then it allows the client to make a little more money instead of buying at the top and sitting through it. But for my clients now, we're just holding our course. We're not doing anything, because there's no reason to. We're above a huge breakout level.
Sage advice, Mickey. Good time for folks to start to talk about how to make sure their allocations are set up accordingly, and also their 401k assets. And I know you've been good about talking to folks. Give us that email and contact information for you again.
Mickey, Mickey, at Envestim, ENVESTIM.com. Follow us on Facebook, on our Envestim page, and follow us on Twitter at Investim1. And like you said, on the 401k side, we do a lot with 401ks. And for people that, have a 401k and want to talk about it, give us a call, shoot us an email. There's a lot out there that for the investment side that people don't understand. It's always good to get help.
Thanks as always, Mickey. Talk next week.
Sounds great, David. Take care.